Good morning and happy Monday to you. You're watching All You Need to Know on Bloomberg Quint Live, and I'm Alex Matthew. First, the headlines today. Finance Minister Nirmala Sitharaman will present her first union budget on the 5th of July. The first session of the 17th Lok Sabha starts from the 17th of June. India's GDP growth falls to a 20-quarter low in the first 3 months of 2019. NSSO data also shows that unemployment is at its highest level since the 1970s. The US terminates India's status as a developing nation and, as a result, excludes it from a program that allowed duty-free exports. GST collection remains above the 1 lakh crore mark for the third straight month in April. And auto sales continued to disappoint in May. Maruti's sales fell the most in 8 years, while Tata Motors sales fell 26% in the month of May compared with last year. Let's talk about the action on Wall Street now. Benchmark indices saw their worst monthly performance in May in over a decade as trade tensions continued to rise on multiple fronts. Trump's tariff threat to Mexico, along with China's plan to impose retaliatory measures, continued to weigh on investor sentiment. Benchmark indices fell between 7 to 8% in the month of May. Renita Young of Bloomberg News tells you what transpired in that session on Wall Street in this report.
U.S. stocks closed lower on Friday in the worst month of the year yet as the trade war intensified with China and a separate trade war with Mexico. Now, this also sent the S&P 500 to its lowest week since the global market rout that happened back in December. This all happens on top of U.S. President Donald Trump threatening to place escalating tariffs on Mexico, sending car makers plunging. Now, why did car makers plunge? It's because Mexico is a key hub of automobile manufacturers, and tariffs would increase costs for virtually every manufacturer. Because of that, GM, Ford, and Fiat Chrysler shares declined by at least 4% during some point of the trading day on Friday. Meanwhile, we are still in the middle of corporate earnings seasons, with retailers coming out with earnings, Big Lots posting positive earnings, better than expected, shares rising on that news, and the Gap actually falling the most since 2016 after reporting disappointing sales in the Gap and Old Navy stores. We do have Box and Tiffany jewelry coming up next week. Meanwhile, treasuries are continuing to rally for a fourth straight session, to be exact, and the Fed's preferred price gauge rose in line with estimates. This, of course, excludes food and energy. WTI crude oil was on the decline, at one point reached the lowest in about 15 weeks. So it's no surprise that gold prices are rising, since investors tend to turn to gold during times of geopolitical and financial uncertainty. And that's a look at your Friday Wall Street action. In New York, I'm Renita Young for Bloomberg News.
All right, let's turn now to the Asian markets just to get a sense as to what direction they're heading in. I'm joined live by Rosalind Shane, who's from in the Hong Kong studio, Bloomberg's Hong Kong studio. Morning, Rosalind. What are you picking up at the start of the week? The concerns with regard to trade, some updates coming over the weekend for us here in India as well.
You are right. Trade still dominant over here in Asia, and we see the MSCI Asia Pacific, the broad gauge for the Asian market here, is declining right now, down by about 0.25% after what was a pretty brutal month of May. So June not starting on a great footing either, and pretty much we saw almost every asset class other than bonds declining in the month of May. Now, of course, if anything, you know, the trade tensions have actually intensified in the last month or so. China's retaliatory tariffs were kicked in over the weekend as well. So that affects more than 2,000 goods there as well, adding to the pressure as this trade war really starts ramping up. Now, China has said, it published a white paper and it said it does not want a trade war, but it does say it was not going to shy away from one either. It blames Trump for the talks collapsing and says a trade war will not make America great again. And also they'd say it's investigating FedEx. Now, we're seeing, of course, some pretty down views across the region as a result of these escalating trade tensions. The Nikkei is trading lower by more than 1%, as is the Topix. Now, in Japan, we do see that techs and telcos are dragging on that Topix index. So we did have a bit of a bright spot in terms of some of the capex numbers out of Japan. We saw that Japanese companies stepped up capital investment in the first quarter, up from a year earlier. So actually, it increased for the 10th straight quarter, up 6.1% versus economists' estimate of increase of 2.6%. So that is quite a large difference. However, that was for the first quarter, and with these, the change really in this trade war continuing to drag on could actually, of course, impact how that goes into the second, third and fourth quarters of this year as well. But at the moment, those figures look pretty positive. Elsewhere in the region, we've got the Shanghai Composite down by about 1/5%. The Hang Seng also trading lower by more than 1/4%. We're expecting the Caixin manufacturing PMI numbers to come out in about 10 minutes from now. That's for the month of May. That will give us a gauge of how bad the trade war also is. We did see some weakness starting to show in April, but of course, since then, the trade war, as we've mentioned, has been really ratcheting higher. Bloomberg Economics thinks that the weaker demand combined with escalation in the trade war is likely to push it lower. The consensus forecast is for that number to come in at 50. Bloomberg economists think that actually it could be even lower than that. So early indicators suggesting that demand weakened in May, and the flash PMI for Japan also, we saw figures out last week, fell into contractionary territory. So overall, not a great picture for the region overall. Last look at Australia, that market there falling 0.8%. The gloom continuing down under. Back to you.
Thanks so much for that, Rosalind. Now, let's talk a little bit more about trade. That is the big headline in the recent weeks. Donald Trump turned his focus on Indian imports on Friday, terminating India's designation as a developing nation. How does that impact India? Well, it effectively eliminates the exemption granted to some goods that did not attract any duty on export to the US. India was one of the biggest beneficiaries of the US's generalized system of preferences, which essentially was aimed at helping countries like India, developing nations, grow their economies. The cap on such imports are set at $5.6 billion. The Indian government, for its part, has expressed concerns over the decision, but said that it will continue to engage with the US for favorable trade deals. All right, let's talk about the Indian economy. It's going to be in focus this week. The monetary policy is out in just a couple of days, but the big headline from last week, from Friday, was the GDP data. India's economic slowdown worsens as GDP growth in the January to March quarter falls to its lowest in 5 years. This apparently is mainly owing to weaker consumption and investment, coupled with slower growth in some crucial employment-generating sectors. Pallavi Nahata reports.
GDP growth in Q4 fell to a 20-quarter low as consumption and investment in the economy weakened. GDP rose by 5.8% in the fourth quarter of FY19, pulling down growth for the full financial year to 6.8%, according to data released by the Central Statistics Office on Friday. In gross value-added terms, the economy grew at 5.7% in Q4, with full-year growth at 6.6%. A Bloomberg poll of 43 economists had estimated Q4 GDP growth at 6.3%. Economic growth was estimated at 6.9% for FY19, according to 23 economists polled. So where is the slowdown? High-frequency indicators such as car sales and imports have suggested that consumption in the economy is slackening. However, the Q4 GDP data suggests a moderation in consumption demand, but an even sharper fall in investment in the fourth quarter. Investments, as reflected by cross-fixed capital formation, grew at 3.6% in Q4 compared to 10.6% in Q3. Private final consumption expenditure grew 7.2% in Q4 compared to 8.4% in the previous quarter. Government expenditure grew 13.4% in Q4 compared to 6.5% in Q3. Sector-wise, agriculture grew at minus 0.1% in Q4 compared to 2.7% in Q3. Manufacturing grew at 3.1% compared to 6.7% in Q3. Financial services, which many believed would be hurt because of slower growth in credit from non-bank lenders, held up well in the fourth quarter. Financial services grew at 9.5% compared to 7.3% in quarter 3.
All right, all of that conversation about the slowdown in consumption leads to talks about the unemployment rate as well. And India's unemployment rate apparently surged to its highest since the 70s. The first periodic labor force survey of the National Sample Survey Office pegged India's unemployment rate from July 2017 to June 2018 at 6.1%. However, it's tough to compare these numbers since such a survey was last done between July 2011 and June 2012. Now, compared to rural areas, unemployment rate was significantly higher in urban areas, with the rate for urban males being pegged at 7.1%, while that for urban females at 10.1%. Now, you can go through all the granular details of that story on the website bloombergquint.com. Don't forget to check it out. I do want to point out one more aspect in the international space, that is global crude oil prices. Let's pull up Brent crude just to give you a sense as to what I'm talking about right now. Remember, at the end of last week, Brent crude was trading close to 66, and that too, that's $66 to a barrel, and that too was a sharp correction from the recent prices close to over $70 to a barrel. Currently, Brent crude is trading just around that $61 to a barrel mark, and that actually marks a significant positive for the Indian economy. Remember, India is a net importer of oil, and it accounts for a large portion of the current account deficit, really. So you'll have to watch that number, and also probably wait a little while before you go to the petrol pump. You'll see some effect there. For now, let me turn to Agam Vakil, who's going to tell you all about the trade setup for the day in India and what's happening in, of course, the futures and options space. Agam, oil marketing companies, I think, would be in focus. What else would you say is top of the list today?
Well, right, Alex. Of course, the OMC is, of course, out there. And given the fact that we've seen a cut in aviation turbine fuel prices too, it may be something that could move the markets, because it comes down to a lot of other areas in the markets. For now, the SGX Nifty, however, is indicating an increase of around 33 odd points. And that, of course, is a positive. But when it comes to our trade last week, there was a lot of consolidation. We did see a little bit of a subdued movement when it comes to the markets in the last hour of trade on last Friday. And we saw marginal cuts there. And, of course, the PSE banking index continues to weaken further. But coming down to your ADRs right now, some weakness seeping in for Vedanta, Tata Motors, Infosys, Wipro, along with, well, marginal gains for HDFC Bank. So, well, at least the ADRs haven't looked very good as far as the day of Friday is concerned. But FIIs and DIIs, for a change, buy into the Indian equity markets, though this quantum is substantially low as compared to what we have been used to over the past few weeks. But when it comes to contributors, ITC, HDFC Bank, and in fact, it's the private sector banks essentially which bear down on the indices, and IT, perhaps to a certain extent, tried to keep the indices buoyant. But coming down to futures and options, now we move into the period where we don't have too many events lined up, save for the RBI credit policy, and we are expecting some consolidation, which is reflected in the kind of movement that you're seeing in the open interest, as well as the underlying for that matter. Nifty banking futures, however, are seeing, well, to a certain extent, some shorts building into the system. But moving on to your open interest distribution, and this, of course, is, well, what we have seen since the first week of, rather the last week of May, and well, 12,000 call is the one with the maximum open interest, and we don't have too much to go for on the lower end of the spectrum. Moving on to your other open interest change. Okay, so there you have it. A substantial amount of puts seeing a lot of accumulation in open interest, and we will have some amount of support around the 11,500 mark. Let's move on and talk about the other stocks. Of course, the India VIX has risen 3%, but this, again, it really means nothing considering what we have been used to of late. Moving on to your well, Nifty put call ratio, that stands at around 1.2, neutral zone still, and stocks, we are keeping an eye on well, Berger Paints, which has had a very, very strong day of trade today. Watch out for that. It's up 10%. and a lot of technical cues seem to have changed for Berger Paints. V-Guard Industries or Jeevan Financial is another one which did see a lot of strength come through. And in terms of unwinding, stocks that have seen decline in open interest, early days in the news series, yet Engineers India, CEAT and BEML do see some sort of unwinding as far as the future is concerned. But more likely, Alex, it is going to be a little more consolidation as we move into perhaps a relatively bigger event of the RBI credit policy this week.
Absolutely. Thanks so much for that, Akam. Well, let's have a look at what's making headlines across the globe. Sue Keenan of Bloomberg News tells you about the first word headlines.
We start with China. China's defense minister says the military will take action to defend Beijing's claims over Taiwan and the South China Sea. Speaking at the Shangri-La Security Conference in Singapore, the minister defended China's right to build what he calls limited defense facilities in the contested South China Sea. He also issued a warning against so-called external forces promoting the idea of independence for Taiwan.
China must be and will be unified. We must be unified. How would there be any excuse not to do so? If anyone dares to split Taiwan from China, the Chinese military has no choice but to fight at all costs, for national unity.
To the U.S. now, Secretary of State Mike Pompeo says the Trump administration is ready to negotiate with Iran without preconditions. But Iran's foreign ministry says his comments do not demonstrate a change in U.S. policy and that Washington's approach towards the Islamic Republic, quote, needs to be corrected. An Iranian military expert has warned that U.S. forces operating in the Gulf are within range of his country's missiles. Some Indian lawmakers are warning of a potential economic crisis. This after President Trump followed through on previous threats to terminate India's designation as a developing nation. The move is due to take effect on Wednesday, and it eliminates an exception that had allowed India to export nearly 2,000 products to the U.S. duty-free. India's main trade organization says exporters now stand to lose up to $260 million of benefits. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan. This is Bloomberg.
All right. Well, the going's only getting tougher for most Indian automakers, with sales slowing down each and every month. Most automakers opted for production cuts in May to manage inventory, and that's reflecting on the wholesale sale numbers that have been put out by individual companies so far. Somit Sarkar is here to take you through the key numbers. Somit, I think every automaker that's come out with the numbers has actually reported a cut, right?
Well, yes, there has been a decline for all the major auto companies, but then for select auto companies, the numbers are actually ahead of the analyst estimates. Now, if we see for Maruti, Mahindra & Mahindra tractor sales, Royal Enfield and Tata Motors, these companies reported a decline compared to what analysts were expecting, while M&M Auto sales and Hero Moto two-wheeler sales were actually ahead of the analyst estimates. Now, for Maruti, the sales were below by nearly 6% compared to the analyst estimates. For M&M tractors, the sales were down nearly 13% compared to the analyst estimates. For Royal Enfield, the sales were down nearly 3% compared to the analyst estimates. And for Tata Motors, it was down nearly 21%. Now, for M&M Auto, the sales were actually 14% ahead of the analyst estimates, and the number came in at close to 45,400 units. For Hero Motor, the sales number were close to 652,000 units, and that was nearly 8% ahead of the analyst estimates. For other auto companies like Atul Auto, the sales were down nearly 13%. Escort's tractor sales were down nearly 18%. Eicher Motors CV sales were down nearly 20%, while SML Isuzu's truck and bus sales were up nearly 17% to close to 16,689 units. Now, three other auto companies are yet to report numbers, that is Bajaj Auto, TVS Motors and Ashok Leyland. Now, all these companies are expected to report a growth. Bajaj Auto's sales number are expected to be high by nearly 4%. TVS Motors sales numbers are expected to be high by nearly 3.6%, while that of Ashok Leyland is expected to be high by 1% compared to last year, that is May 2018.
Thanks so much for that, Somit. Well, let's talk about some of the other stocks. Of course, all of these will be in focus over the course of today. Mishika Parak is joining us to tell you all about the stocks in news. Morning, Mishika. What's on your list today?
Good morning, Alex. Well, there's a long list of stocks that we need to look at today, starting with airline stocks that are in focus as IOCL cuts ATF prices for the first time in the last 5 months. Pan-India prices are cut by 0.3% compared to last month to rupees 66,611 per kiloliter for June 2019. Then we have Coal India. The production in the month of May drops 1.1% to 47 million tons. Also, sales in the month of May drops to by 1.4% to 52 million tons. NCLT has sanctioned the merger of Indus Towers with Bharti Infratel. And Great Eastern Shipping will do a buyback of 33 lakh equity shares at a price of 306 rupees per share, which is a 9% premium to the current market price. Then Quality came in with results that were extremely weak. Their revenues were down 93% at 114 crores. There was a net loss of 497 crores versus a net profit of 1 crore. An EBITDA loss at 451 crores versus an EBITDA profit of 137 crores. And there was other expenses of 452 crores in the current quarter due to provisions for doubtful debtors and write-off for assets. The auditors state that the current financial conditions may indicate the existence of a material uncertainty on the company's ability to continue as a going concern, and therefore the company may be unable to realize its assets and discharge its liabilities in the normal course of business. And lastly, we have NBCC. They've received a total business of 25 crores in the month of May 2019.
All right, thanks so much for that, Mishika. Well, Nirmala Sitharaman, who assumed office as the Union Finance Minister on Friday, will present her maiden budget on the 5th of July. The government, which won a decisive mandate in the elections, is expected to turn focus to boosting growth amid other state-run programs. Questions have been raised, however, on India's fiscal deficit situation and overall tax buoyancy. Remember that this is coming on the back of an interim budget, and a lot of people said that the interim budget was quite like a full budget. So it's possible that some of the headline numbers that you saw in the interim budget will repeat themselves this time around, particularly in the realm of personal tax or income tax. Let's talk about some of the stories you'll find on the website bloombergquint.com. I'll take you through a couple of them. First up, with an aim to check frivolous appeals against its orders, with the sole aim of delaying their execution, Capital Market Regulator Securities and Exchange Board of India, that's the SEBI, is seeking a mandatory deposit of 10% of the penalty amount before filing of any appeal before the appellate tribunal. And the goods and services tax collection for April declined to around 1 lakh crore rupees after surging to a record a month ago. But this is the first time that GST collections have stayed above the 1 lakh crore mark for 3 consecutive months. All right, that's all you need to know going into trade today. But do remember, there's a lot more that will come up over the course of the day, beginning with a conversation before trade actually starts at 8 a.m. So do stay tuned for that. This is Bloomberg Quint.